WACC and terminal growth, compliance-safe assumptions wording. Welcome! In this micro lesson, we'll craft forecasts that are persuasive yet compliance-safe. The formula is simple. State assumptions clearly and narrowly, so reviewers know exactly what you're modeling. Use neutral, non-promissory language. Say what the numbers indicate, not what they guarantee. Tie your figures to observable market data like yields, betas, and indices to show discipline, not optimism. And always flag ranges and sensitivity, not certainties. When you present what could happen and why, your forecast becomes both credible and defensible, ideal for investment committees, auditors, and regulators. Your WACC is the weighted average cost of debt and equity, the discount rate for valuing future cash flows. Build it from transparent inputs, a risk-free rate, e.g., government yield, beta, systematic risk, equity risk premium, ERP, and a credit spread for debt. Explicitly disclose your tax rate and target capital structure so others can replicate your math. Most importantly, frame results as based on current market estimates, a reminder that inputs move with markets. Clarity on components plus careful wording keeps your model robust and audit-ready. Make your language do the compliance work. Prefer, we estimate WACC in the XY% range. Follow with, inputs are derived from source, date, and may change. Add a decision useful note, sensitivity. A plus or minus 1% change in WACC shifts indicated value by %AB%. This quantifies risk without promises. Avoid definitive phrasing like, our WACC is, or any claim tied to guaranteed fair value. Ranges, sources, dates, and sensitivities together show judgment, traceability, and respect for uncertainty, exactly what reviewers look for. Terminal growth G represents the long-run growth rate of cash flows after the forecast period. It is not a license for aggressive assumptions. In mature economies, G should generally not exceed the combined long-term GDP and inflation expectations. Anchor G to macroeconomics and industry maturity. Regulated utilities likely sit near inflation. Nascent sectors may warrant a bit more, but still bounded. Use ranges and justify with data like consensus GDP, inflation surveys, and industry life cycle analysis. A disciplined G keeps your terminal value realistic and defensible. State terminal growth with restraint and evidence. Example, terminal growth is assumed at G% within a 0x% range. Add the anchor. This is tied to long-run inflation/GDP forecasts. Include a stability check. Cross-check G less than WACC, supporting a convergent model. This guards against inflated terminal values. Avoid any phrasing like perpetual high growth. It suggests certainty and ignores market saturation. When you show the anchor, the range, and the mathematical check, compliance reviewers see prudence, not promotion. Aim for full traceability so anyone can rebuild your numbers. Cite data vendors and dates explicitly for every input. Note the peer set or index used to estimate beta/ERP, including the screening rules. Document your tax rate policy, statutory versus effective, and your leverage target, market versus book. Maintain an audit trail of revisions. What changed, why, when, and the effect on value. This paper trail speeds reviews, reduces objections, and lets stakeholders trust both your process and your conclusions. Show how outcomes move, not just the point estimate. Present base, downside, and upside cases with clear drivers. Use neutral verbs like illustrates, indicates, and could to avoid promises. Include a tornado chart or table showing the impact of WACC and G on value, fast for committees to digest. Finally, highlight limitations and uncertainties. Data coverage, sample size, cyclicality, or model structure. When you communicate uncertainty quantitatively and plainly, you empower better decisions and satisfy compliance. Use ranges, sources, and dates for both WACC and G. Justify assumptions with market and economic anchors, risk-free rate, beta, ERP, credit spreads, GDP, and inflation. Avoid certainty. Prefer conditional phrasing like estimates, indicates, based on current data. Always include sensitivity for WACC and G, plus brief compliance notes on inputs, scope, and limitations. Follow this template and your forecast will read as careful, transparent, and approval-ready, strong enough for investment memos, board decks, and audit files.